Hello everyone. Amazon shares dropped for about 15% from the high. This happened partly because of the latest earnings report. In this video, I will analyze the company. I want to answer one question. Is Amazon a good investment in 2026? The latest earning reports showed that revenue and profit met expectations. Sales grew 12.4% year over year, and profit jumped by a huge 31%. However, investors are worried. The company plans to spend $200 billion on capex in 2026. AWS cloud revenue is accelerating. It grew from 20% to 24% by the end of 2025. Cloud computing creates most of the operating profit, with an operating margin of 35%. The second growth driver is the advertising business. It is growing at 22%. This segment has a margin of over 50%. In 2026, advertising revenue will reach almost $80 billion. The Amazon ecosystem is also growing. Today, Amazon Prime is one of the most popular paid services in the world. It has about 250 million subscribers worldwide. The average subscriber spends around $1,400 per year on Amazon. This is 2.5 times more than a typical customer who spends only $570. In 2025, Prime Video revenue from advertising and subscriptions was about $5.6 billion. For the fiscal year 2025, total revenue from the subscription services segment was $49.6 billion. This huge subscriber base creates a financial moat. It protects the stock during the market volatility. Even in a recession, people rarely cancel Prime. It is no longer a luxury. It is a basic necessity. Please subscribe to the channel. I will be very grateful for your support. In 2026, Amazon plans to spend a record $200 billion. Where will this money go? AWS infrastructure, 60 to 70% of the budget. Amazon is building giant data centers around the world. They need space for hundreds of thousands of new servers. In-house chips, Trainium and Graviton. Amazon is investing billions to develop its own hardware. Instead of buying expensive chips from NVIDIA, they make their own. This reduces dependence and increases profits. Energy. Data centers use a lot of electricity. Amazon is buying small nuclear reactors and investing in green energy to power them. Logistics robots. The company is putting new AI robots in its warehouses. This will make delivery even faster. Amazon Leo, formerly Project Kuiper. This is a competitor to Elon Musk's Starlink. Amazon is launching a network of satellites to sell internet globally. This is not just about internet. It is about bringing more customers into the Amazon ecosystem. Investors fear that Amazon Leo will burn through cash for many years before it becomes profitable. Where will the money from this capex come from? Operating cash flow. This is the main source. Amazon's business generates a huge amount of cash. The forecast for 2026 is more than $120 to $130 billion. Cash on hand. At the start of 2026, Amazon has about $86.8 billion in cash. If we include short-term investments, their total liquid assets reach $123 billion. New debt. Analysts expect Amazon to enter the bond market in 2026. They might borrow another $15 to $20 billion so they don't spend all the ready cash. Because of the huge costs, analysts predict that free cash flow could become negative in 2026. Amazon is choosing to sacrifice current profit to dominate AI in 5 years. This is a long-term game. They are spending more than they earn in net income to build an infrastructure that no one can copy. Please like the video. How many years will it take to recoup this $200 billion in capex? Investments in cloud infrastructure have a long life. Data centers, buildings, payback period is 15 to 20 years. Servers and chips, Trainium and Graviton, service life is 5 to 6 years. 2026 and 2027 will be the construction period. Free cash flow will be under pressure and profits might grow slowly. Wall Street analysts expect a big return on investment by 2028 or 2029. When the infrastructure is ready, Amazon will save money on chips. They will use their own Trainium instead of buying from NVIDIA. They will also get huge payments from companies renting AI power. With the current ROIC, return on invested capital, of 13.77%, a $200 billion investment could create $27.54 billion in extra profit per year. This means the money could be fully recouped in about 7.3 years. But this profit will not arrive immediately. Building data centers and launching Amazon Lea satellites take 2 to 3 years. This means a real payback period is actually 9 to 10 years from today. For US investors, this is a normal time frame for infrastructure projects, but it is long for software companies. This explains why the market is nervous. Investors want quick returns, but Amazon is building a foundation for the next decade. Analysts expect revenue to grow by about 12% over the next 3 years. For 2026, the predicted EPS is $7.71. This is only a 7.5% year-over-year growth. However, in 2027, the EPS could rise to $9.33. This 20% growth will happen because the record investments will start to pay off. By 2028, EPS could grow another 25% to reach $11.70. Right now, Amazon's valuation is similar to the S&P 500 average. Since we don't expect big profit growth this year, this is no reason to hurry and buy. It is better to watch the earnings reports during the year and look at the price action. We might see Amazon stock at an even lower price. What do you think? Share your opinion in the comments. Thank you for watching and good luck with your investments.